Hello, Gemma. Thank you so much for joining us today for our ESG Investment Influencers series. It's great to see you. I'd like to start by asking you about what's really driven your passion for sustainable investing and which areas are of real interest to you.
So I have seen a couple of these videos and I was slightly alarmed because I've been around about, goodness knows how many times longer than everyone else. So I've been doing this for about 25 years now. So I remember when we used to talk about ethical, then we talked about SRI, and it slowly developed over the time. And to me, it was just something that I was just interested in from the very start. I think, I remember reading No Logo many years ago, and it made you think about the corporate sector and really what is important. So it's just been a really long time that I've been involved in it, to be perfectly honest.
Yeah, and as you say, you've been involved at that time when ethical investing was mentioned, but maybe not very often. And now we're at this point in the evolution of sustainable investing where it is part of the mainstream, and especially over the last 2 years. What's been your perspective on that, this huge transformation?
So it's really interesting because I think pre-2008 and the financial crisis, everyone was like, oh, ESG, sustainability, we're really interested. We had the financial crisis and everyone was like, forget about it. We just want to make money. And I think truly it is different this time because you have such a change in public perception. We did an event, it must have been late 2019 now because we were actually in the office. And one of the things we were talking about is, do you believe in climate change? And there was someone quite young in the audience who was astounded that I even asked the question. And that I'd explained that 10 years ago, a lot of people would have put their hands up and said, no, I don't believe in climate change. So you've got huge public perception change, but you've also got regulatory change. So the industry is being forced to do things. So, I genuinely believe, I've waited a long time, but the time has finally come and we really are seeing that change.
And I wanted to ask you actually about what you're hearing from clients in this area and how you're trying to meet their needs. So what are the key things that they're saying to you?
So, it's interesting. So at the average age of one of our clients is 64. So I think they're boomers. They're certainly not Gen Z or millennials, but they still are really interested in this. So it's a bit of a fallacy that it's millennials who are driving this. It is the older generation. Maybe they're being influenced by their grandchildren, their children, who knows? But they certainly, we have a long history of people wanting to exclude certain areas from their investment portfolio, and that's really developed now where they are wanting to talk to you about engagements. They do want to vote their own shares sometimes, and they have a genuine interest in looking at something that has a more sustainable feel to it. So it's important for us is that we've got ESG integration as kind of our foundation of what we do for clients, but that we can offer them the exclusionary kind of policies, the sustainable, and also positive change, which is a fund-to-fund approach. So you're seeing that clients want that breadth, but they also want that foundation of the ESG integration bit.
And in terms of measuring the impact of your portfolios and then sort of reporting and communicating to clients, what sort of work have you been doing there?
So this is an interesting one because I've always been a bit of a skeptic. Which is a terrible thing to say, but I kind of think you can produce a really lovely report and you say, well, the carbon is X. Now, a lot of the time that carbon level is going to be driven by whether the oil and gas sector is in fashion or not, unless you're actually developing a total sustainability kind of approach. So, for us, what we're now doing is for our sustainable strategies, we're doing the full kind of reporting suite about what the impacts are, but also for our model portfolios as well now, because, we want to at least understand where the risks are within those. We're not saying we're going in whichever direction necessarily. I think we all know there will be one direction everyone will go, but it is really important that we understand those risks as we look at our investments.
And what's sort of really key for you in terms of your due diligence process when you're selecting funds for these portfolios? What are the key things that your team are looking at?
So I can't take any credit. It's the fund research team, particularly Melissa Scaramellini, who's done a lot of work on this. So what we're kind of looking for at a base level is the active ownership. What are they doing from a stewardship perspective? Are they signed up to the United Nations backed PRI? That's the starting point. And then beyond that is actually digging into it, because what may be said at the firm level may not be what's happening at the fund level. And also, if you're putting on a label of sustainable or impact, there are those much higher hurdles that we need to see people go through. Now, some of this can be quantitative, but a lot of it is qualitative. And I think, the head of fund research always says it's when you ask the fund manager the question and they look a bit worried, that's when you know you might have a problem.
And are you sensing that there is quite a difference in the way asset managers are approaching this, or what you're seeing? Some seem to be sort of leading the way and ahead in this, and for others, it's really just it is sort of playing catch up at this point and working out how they approach this. Are you seeing that there's quite a big range in what's being offered?
Oh, I mean, I think absolutely. There's, for some firms who this has just come at them and they're like, well, what are we supposed to do? It must be very difficult. But I also think the important thing is understanding where they want to get to, because you are never going to have the finished article on this. Trust me, there's always going to be something else you need to be doing. So it's understanding the resources and that journey, which I hate that word, but the pathway they're trying to follow to get to the right place, and then where they're going after that is the important bit.
And just sort of moving on to touch on something you mentioned earlier about engagement, where are you trying to make a real difference in terms of your engagement with companies and the industry, I suppose, in terms of the themes that you're sort of focusing on? What's really important to you?
So I think, from our perspective, obviously, we've got a significant, quite a bit of our assets under management are in funds. So then it's about talking to those third-party managers and understand what they're doing. But also we have a lot in direct. So we engage ourselves with the companies, particularly where we have, material positions. And that can vary enormously. Last year, a lot of it was far more about the S, given COVID, and talking to people about, working conditions. Remuneration season could be quite interesting, depending on how companies kind of go through with various policies. But I think for us, the key themes, and I think they're pretty self-evident, but at a high level, climate change, people and human rights, and also water. And, so what we want to always do is, to be engaging with companies in advance of AGMs, obviously on the governance score, but also understanding through our fund and equity research teams what those companies are actually doing about those different issues. And, they're just the top line. It's all about, how is the company behaving? Because there's no such thing as a perfect company. Every company will have pros and cons around ESG factors.
And just moving on to sort of ratings and global standards, which ones do you use and rate highly in this area?
So, I mean, we use a number of different kind of data providers, because what's important for us is we employ analysts. So it's really important that if we want to get, ESG data into the investment process, into their thoughts, then they need to be the person who's finally responsible for that decision. So, we do use ESG data providers, and it's always interesting because people say, oh, well, they come up with different scores, how does that work? Well, it's exactly the same as you would have, that one analyst says something is buy and another one says it's not. Some of this can be quite subjective. Some of it is pure numbers, and that's very easy, but the subjective element can be a bit harder, and that's why we think you have to have it in the process so that the analyst who knows the company can actually interpret that and use it in a really sensible way that's informed. Just sticking a number on a company and saying, oh, it's a 10, that means it's brilliant. We're just a bit worried because actually there's more nuance than that usually around it.
And do you use active and passive strategies in the portfolios? How have you sort of structured that?
We do have some exposure to passives, and that tends to be significantly smaller. On the vast majority, we are, active. And in the passives, what we're doing increasingly is looking to see, what is the right option when we're taking into account ESG factors as well. And I think that will be an area that will continue to grow. A few years ago, we were all hearing about smart beta, with an ESG overlay. And I think that will continue, certainly that trend.
And in terms of product gaps or development within the industry, what's sort of interesting for you in terms of areas that are maybe sort of developing now?
I think given where we are in terms of kind of the market, is it sometimes harder to get lower risk kind of options for people in terms of what do you invest in to actually get that outcome. The bond market, I won't say anything about it because it will probably change because that seems to be happening at a day by day basis. And yes, we do have a kind of really good renewables market and exciting areas in infrastructure, but that's still quite small. And, it's still got to go through, probably we've got to see a lot more growth and be able to buy it at the right price. So I think actually being able to access things, lower down the risk scale and construct portfolios or products there is a really interesting area.
Yeah, and just about, I know you've already highlighted some of the major themes in this space for this year and beyond that you're sort of looking at in particular, but just sort of looking ahead, what are sort of key areas that you're sort of focusing on? Obviously, climate change is the big one that's grabbing the headlines.
Yeah, and it's interesting. Some people say, oh, COVID-19 is a warning to us about, if we think this is bad, think about what climate change is. I think, in the real near term this year, we're going to be focusing quite a lot on remuneration and how that links to, what happened last year and how companies are dealing with that. And I think there will be some quite difficult conversations around that. It's continued on the governance side. Looking at what people are being paid in terms of pensions and the gap between the, executive directors and the other employees. I think as well is that it's more and more on the social aspects. It always felt like the poor cousin or poor relation. And increasingly, I think, people have worked in a very different way over the last year or so, or haven't been able to work. And, that is going to reflect in the way that we, approach companies in terms of working conditions and employee relations.
They're all really interesting areas to keep an eye on. And as you say, the S in the ESG have definitely had more attention than last year. And just finally, what would you like to see now from the industry in terms of the evolution of sustainable investing? What would you think is really important that we get right?
I think it's accessibility in terms of, do we understand what actually is being sold? And, people talk about greenwashing, rainbow washing or whatever. But actually, even when I'm in a meeting with colleagues who are also working in this area, we all have problems with the language sometimes, because it is still whatever tries to happen, it's still really complicated. And you say impact, and I know I have a very certain view of what impact means, and someone else may think, well, why on earth would you worry about that word? And I think it's trying to get through some of the jargon so that if someone wants to buy a fund that excludes things and has a bit of a sustainable theme, they can find that, and they're going to know what they're buying, rather than sometimes I think it all gets rather confused in terms of, what actually the project is trying to deliver.
Yes, I really hope we do see a lot of changes in that area. I know it's something a lot of companies and more globally people are looking at. So it'd be good to watch this space as well and catch up with you on that in the future. Well, thank you so much for joining us today, Gemma. It's been great to see you, and thanks for your insights there. Thank you.
Thank you.